Welcome to the Art of Money podcast with Art McPherson.
And thanks for checking out the Art of Money podcast. My name is Mark Owens alongside Art McPherson and Luke McCarty. All the information for the McPherson Financial Group, you can find it at theartofmoneyradio.com. You know, the markets have been kind of wild this week. The markets have had a pretty good summer, but September has historically been the worst month of the year for stocks. I want you to hear this clip from analyst Bill Rook, who told Fox Business this one probably isn't going to be any different.
You saw this last year. We had a nice big run into September, and then out of nowhere, we had a couple of days where it started moving lower, and it fed on itself. I'm not saying we're going to fall 10% like we did last September, but I think we're due for a correction.
Yeah, we know, Luke, you and Art tell us all the time, we know that the market is going to turn. And when it does, I'm wondering, does the average person's investment really line up with their risk tolerance level?
Yeah, so, I mean, the month of September is always a little weird, right? Because you have kind of the dog days of summer, right? Then you have this kind of pre-fall area, right? And then historically, as you get into more of the end of the year, you have the Santa Claus rally. So historically, September has not been very good for the markets. Over time, still positive, just not as positive as other months. Most recently, if you've heard on the news, the second largest real estate company in China is going under. Big issues this last week with the credit markets, of course, with the Hong Kong index, the Chinese companies in general, banks are getting hit. So there is some concern and some risk out there. But when we analyze stocks here at McPherson Financial Group, we look at the balance sheet. If you were to look at the balance sheet of Evergrande, was the name of it? I think that's how you pronounce it, but Evergrande in China, it is horrible, right? It started off being really good, and then they were just leveraged and leveraged and leveraged. Well, the companies we're buying here are, have good, positive, free cash flow, right? Don't have a lot of debt. We avoid those types of mistakes, those types of big risks in individual stock selection by, just looking at the balance sheet, looking at the income statements, crunching some numbers.
321-425-8550. Again, 321-425-8550 to reach out to Luke, to Art, to the entire team of the McPherson Financial Group. What was when we were talking about the markets a second ago, you said the Santa Claus effect. Is that just because we're all shopping around the holidays?
Well, just historically, the markets in general, right? They just rise up, towards the end of the year. The Santa Claus rally. So usually December's a really positive month. Everybody is either, out there buying, and you just buy into the market and you feel good about it. And, just historically, the market's done well. But to follow up on your question earlier, before I got into China,
right?
You asked if the average person's investments line up with the risk tolerance.
Yes.
That's a great question. I want to make sure we hit on that. Usually not. So most people are unaware of the amount of risk they are taking in their portfolio, right? We had a new client recently, getting ready to retire. He was 100% in the stock market, all aggressive, all growth, right? It's done extremely well the past 4 or 5 years. So kudos for taking the risk. But when the market turns, when we have a correction, there's no more retiring, right? You can lose 30, 40, 50% on that portfolio, and that's when you can't retire. So you have to be very careful and just know what you own, because more than likely you're either taking too much risk or you're not taking any and you need to take some.
What, in your opinion, what is not enough risk?
Not enough risk would be not keeping up with inflation. So historically, right, your inflation's been 2 to 3%. Most recent, it's about 4 to 5%. So if you just own treasuries or CDs, even bonds right now aren't keeping up with inflation, you're not taking enough risk. Now, I'm not saying go completely the other spectrum and, jump on the equity bandwagon, but you should own some equities or something that gets you a higher return, at least a 4 to 5% currently, or else your money's sitting in the bank, your money's sitting in the safe. Wherever your money's sitting, Mark, it could be, you're losing value because prices are going up.
Yet another reminder from Luke McCarty that inflation isn't going anywhere. I thought about you guys last week. I was talking to a buddy of mine, and he uses one of those big box financial firms that you see, advertised nationwide. And he knows that me and you and Art, we work together, and we have the Art of Money radio show that airs every weekend. And he made a very interesting observation. He said that he had a very simple question for his money guy. And he said he had to get online and schedule an appointment for over 2 weeks away just to have a 5-minute conversation. So a quick question about a rollover, and he couldn't do it for another 2 weeks because he uses one of these firms that's all across the country. And he made an analogy that he said that it felt like he's going to get his oil changed because he's just sitting in line waiting and waiting and waiting for when it's convenient for them. Not when it's convenient for me, but for them. And I think, Luke, that just really points out the importance of having the McPherson Financial Group local, having you guys here in town to help out the local community.
Yes, definitely. Hey, was your buddy's phone number that he was calling, was it a 1-800 number?
It was, as a matter of fact.
Yeah, so that's what you get sometimes if you have the big box store kind of approach. You know, you get the 1-800 number. You may not get the same person when you call in. Mm-hmm. Sometimes those are kind of more do-it-yourselfers, right? You can do it yourself at Fidelity or Vanguard, but if you have a question or a tax question, you're calling the 1-800 number. If you think about it, it's kind of like the Social Security office, right?
Right.
If anybody listening has ever called the Social Security office, I hope you've called more than once, because when we call with our clients, sometimes the person on the line knows what they're doing, to be honest, and sometimes they don't.
Right.
So same with your pension plan or your 401k plan, whatever it may be. So that's not how things work here. We have a local number, RN myself, right? Multiple fiduciaries in the office. Pam's always happy to answer the phone. Susan can, do a lot more. She's registered here in the office. So a lot of supporting cast here that you don't have to wait 2 weeks for a 5-minute phone call. I may not be the one answering the phone, but I'll call you back that day.
But literally, Pam can just lean back, and instead of putting you on hold, Pam can say, Luke! Luke!
Luke, get out of the kitchen.
And that, you talk about a local number, and to reach out to the team, it is 321-425-8550. Always online at artofmoneyradio.com. And after 70 years, Major League Baseball is severing its deal with trading card icon Topps. Man, I collected them. Did you collect them as a kid?
I did. So baseball cards and football cards, yep.
I have, my older brother Sam has 2 or 3 boxes of Topps saran wrapped with a big note that says "Do not open" from like the 1990-91 season. I think he thinks that might be his retirement plan. But look, the story is that the MLB is now signing a new deal with the sports apparel maker Fanatics. And, long-standing relationships in the retirement planning industry can be a very sensitive issue. But, this was pretty big. Much about baseball card fans and friends, they're like, man, Topps getting away from it. So when a potential client approaches you with concerns about their current financial plan, how do you handle that conversation? Like we said, it could be sensitive. What's your approach?
Yeah, great question. So, we get this all the time. That's kind of our, second opinion that we give to prospects and potential clients. Mm-hmm. We understand, a lot of you listening have an advisor, and we would hope you do, because it's a hairy road, right? It's very complex and very complicated. And then when you start throwing in all the tax code and tax legislation and all the new taxes coming out, right, it can get very, very tricky. So what we usually do when we sit down with somebody who has an advisor is we just look at their portfolio, we look at their financial plan, and we kind of run it in our version of our software and say, okay, here's what happens if you don't do anything different and you stay with your current advisor, right? Here's what happens in that scenario where you stay and we have a tech bubble or we have an 08-09 subprime mortgage crisis, mm-hmm. right? We have the lost decade from 2000 to 2010 where you didn't make any money in the S&P 500. Sometimes we run that scenario and run that plan and look at their portfolio, and it's not as bad as they expected, right? It's not devastating if they go through that event. Mm-hmm. But then we compare it to what we would do differently and how no advisor knows when those events are happening and when they're coming. And here's what we would do differently, and here's why. Here's how our portfolios perform during those times, and when, capital WHEN, when the next big correction comes, here's what your portfolio is designed to do. So if you have that plan and hey, these big events are coming, but my advisor doesn't know when they're coming. Luke and Art don't know when they're coming, but Luke and Art planned for that. We prepared for that. Mm-hmm. What we don't want you to do is be down 20, 30%. Call your advisor and your advisor says to ride the wave, right? You can ride some waves. You're going to have to ride waves in the market, mm-hmm. but your plan needs to dictate what you're doing, when you're doing it, and why you're doing it.
321-425-8550. Again, 321-425-8550. It's all about having a plan, because I love how you said that. Capital WHEN, when the correction happens, because it will happen. And that's why it's important to have that plan. As we talk about, putting the plan together, even a little bit can mean a lot when you're trying to get in your daily steps. Well, there was a new study out of the University of Massachusetts that says there's no need to feel bad if you're coming up short of those 10,000 goals, those 10,000 step goals you have every day. And the study even said even 7,000 steps can make a big difference for middle-aged adults. So, Luke, can the same be said about retirement planning and putting that plan together? Like, many think that they have to make huge contributions to see their savings grow. Or is this a kind of a case of, slow and steady wins the race?
No, that's a great question. I mean, a lot of times when people come into our office, they are nervous that we're going to, try to get them to save more than their budget allows, or try and get them to do something that in their mind they thought they weren't able to do anyways. And so they kind of shut down. That's not what we do, right? We're humans too. We understand, right? If you get a raise this year, and that's easy math, your raise is 3%. Well, you should, benefit from some of that with your lifestyle and maybe save 1% or 2% of that. So if you get a 3% raise, put an extra 1 or 2 in the 401k. That way it's a win-win. Mm-hmm. But the phrase slow and steady wins the race, potentially, I'd say more steady wins the race. Maybe not necessarily slow. Depends how much time you have in front of you, of course. But yeah, so just creating that plan and knowing what you're saving each year and knowing why you're saving it. I've read and listened to a lot of Dave Ramsey, and he has a great point where he says every dollar has a purpose. If you know what your savings goals are for the year, then you can spend freely, right? If you know I can get to my goal by saving 10 or 15%, whatever that number is, and you're doing that, well, everything else is kind of free game, right? You can live freely within those parameters. Whereas if you don't have a plan and you're just worried that you're not saving enough and don't know how much you need, you're always going to be worried and you're always going to feel bad, buying that new putter, right? Buying the new driver, because gosh, that could have went to an IRA. It could have went here. Big picture, of course, if you saved every dollar you've ever made, well, you could retire sooner, but that's not life, right? We're humans.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174. 725.
Today's show has been a work of art.